Good morning, everyone, and welcome to the pre-market analysis and trade plan setup for Monday, September the 15th, 2014. My name is Doug McKay. I am the founder and head moderator here. We have a private Skype room that we have run now for 5 years, and basically we come in to talk about the market, talk about our trading, and then each morning we come into this live session where I go through my analysis and set up my hypotheses, my trade levels, and my targets for the day. Before I do anything, I do have to get the disclaimer out of the way, so let me get that done. This information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. Only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. While the risk capital should be used when trading futures or options, investors could lose more than initial investment. Nobody at Stealth Trader is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see are for education purposes only. Please trade your own due diligence and your own trade plan. Okay, so let's talk about, let's just get the news out of the way. We had Empire State Manufacturing at 8:30 Eastern Time. We have capacity utilization and industrial production coming up at 9:15 Eastern Time, so that'll be in just about 25 minutes. Not real big news today, so but keep an eye on it just prior to the open of the RTH session. Let's just take a look at Friday for a minute. We talked about opening up inside, just inside of the value area from Thursday on Friday. We were using a little bit above at the 89 1/4, 89.75 area as our upper trade area, and then we were using the this area right here at the 83 1/4 as our lower range for the open. And we didn't quite get the trade off of the trade area up here. We had to wait until we broke below here, and you can see once we broke below there, then went and hit our first target and the open from Thursday, and then found buyers, rotated back up, fought that 83 1/4 level, and then eventually just started selling off, selling off, selling off, selling off, all the way down to our target down at 74 1/4, and the naked VPOC at 72.75. Sort of went sideways there, then went down and hit our bottom and our target at 71 1/4 before rallying into the close up to 77. So I mean, it acted somewhat like a trend day, but it wasn't really a trend day because we only broke the IB to one side, and we came up and closed near the IB. So it was a rotational day with a downside bias, which is something that we were looking at if we couldn't get outside of the prior day range. So let's go take a look at the macro and the micro, see where we are within the trends. Now I'm going to be using, I'm still using the continuous contract. So you can see that the high is still showing up there at 2011. I do that because I believe that we will see equalizations of those highs up there. So I realize I'm running on a continuous contract, and the numbers are going to be. I'm really watching the trends. So you got good slope and separation. Price is paralleling the 9 nicely. The trend is very much intact on the monthly. On the weekly, we had the contract rollover, so we're showing the little bit of the delta gap between the September and the December contract, but we're still trading above the 9 EMA on the continuous. We lost a little bit of slope, a little bit of separation. This is going to be a key level for us to hold, is this 71 1/4 area. And if you think about market has memory, that 71 1/4 was that double distribution area between 67 1/4 and 71 1/4. Those was the two that we've been watching now for almost a month, if we, broke that 1980 on the September contract, that we wouldn't really have anything to hold until we got to the 71 and a quarter, 67 and a quarter area. And of course, with the rollover, we got that test, and they're testing that level. Even though it's on the September contract, you still have to, as you're transitioning into the rollover adjusted numbers, you always have to pay attention to those other numbers, because people have been trading them for the last 3 months, and those numbers are going to have memory, and you are going to see reaction. So even though it's the double distribution is below us, on the December contract, we're come down and hit it on the September contract. Overall, though, the trend is still intact, although we have lost some slope and separation. Going over to the daily, you can see there's our delta gap from the September and December rollover. We've left a naked cross up here on the daily at 1993. I think there's still a lot of repair that we have to do up above, so I'm not convinced that this top is in at 2011. I still think it's going to get taken out. Of course, going all the way down to that double distribution means nothing in the longer term time frame. It's just a move down to find more buyers with convictions. But you can see the gap there. We're currently trading 76 and a quarter right now. We have a little bit of a rollover, a violation of the trend on the daily. So we'll have to keep an eye on that and see in the next few days whether or not we start a downward trend towards that 66, 63 area now, which is that double distribution that was formerly 71 and a quarter and 67 and a quarter. Let's just take a quick look at the geometric chart. And again, this is running on the continuous contract. I'd like to see where the delta gap is, but we've basically broken down below the downward sloping fork with the gap. I'm probably going to take this fork off, but I'm going to leave it here for today and tomorrow to see how it reacts. We are testing the center line of the intermediate upward sloping fork. We've broken outside and below the longer term upward sloping fork. So right now I'm looking to see if we can hold this level here at the 1972. It's really 71 and a quarter that I'm watching. But if we can't, then we could see a bigger move down towards this lower line here. On the upward bias today, a test of 83.50 will test the lower line of the downward sloping fork, and above that I'd be looking for this energy point. And this is the reason why I'm leaving this contract, because this energy point is due tomorrow. So if we can get inside of the lower slope, the lower line of the downward sloping fork, we could come up and hit this energy point tomorrow up in the 1992 and a quarter, 1992.50 area. Let's go and see what type of trends we have, if any, coming into the RTH session. Looking at the intraday charts, you can see that we had the big gap down on the 4-hour with the rollover. A bit of a technical gap will take us to close that gap at 79, call it 1980, and we've left a naked cross up here at 1991 and a quarter, so you might want to write that down in your journal. A little bit of a start of a trend right now. See if we come up and close this gap. This is normal action with the rollover and the delta difference between the two contracts. I'm not going to call it a true trend yet, but we'll be watching it a little bit closer. On the 30-minute, you can see we had a pretty strong trend going before the delta gap. Now we've come in. We had a bit of a FUBAR tech gap, Mr. Sneaky right here. We closed that tech gap through time. Sort of just went sideways most of the night until Europe opened, and Europe rallied us up into the 76.50. A little bit of a trend starting on the 30-minute upwards, and going down to the 5-minute. 5-minute, you can see that we've come up and it had this technical gap, came down, tried to break below the 9 and the 20, closed it below a couple times, and then on the news we've moved up higher, creating a technical gap here. A gap close will bring us down into the 75 range. Naked cross right here at 75 and a quarter to keep an eye on as well. So no real trend on the 5 minute, more consolidation. Possible head and shoulder setting up here. So watch the 5 minute for a possible head and shoulder pattern showing up. So let's go take a look at the big picture. You can see that we're still above this key level, and the level I want you to pay attention to is going to be this 1970. You can look at the 72 for a test of the 70-50, but you've got your longer term microcomposite value area high and the VPOC from the 2 days that they accepted value higher just before they broke out at that 70-50. Anything below that, then I'm watching this area down here. The 63 and a quarter and 59 and a quarter is our 71 and a quarter and 67 and a quarter from the September contract. That's the double distribution. This is where I'm looking at a possible rotation down, back into balance, back into where the microcomposite VPOC is. We haven't come down here and tested this area again since we broke up and gapped up. So, you can use 72 for a push through to 70-50, but below 70-50, you can look at this little LVN right here at 69 and a quarter. I'd be shorting the hell out of it coming into the 63 and 59 area, because that's likely where we're going to go. We're currently, still in range, but we're outside of value. The microcomposite value area low down here is at 1976 and 78, and we're trading 76 right now, basically right in around Friday's close. What I want to do here is let me bring a little bit bigger profile in here and bring all these days in range and see how this looks too. Let me bring this front. Just let me edit this for a second here. Why did that not go? Let me just try that again. All right, so I'm not going to bother editing it right now. You can see that on the smaller, last week's microcomposite, the value area low is 76. The bigger balance up here, the value area is 1980, 50. Which is no surprising because we were watching that 1980 on the September contract and a break below that. We were looking for a move down to test the 78, 75 that was the microcomposite value area high on the September contract, adjusted down to 71 right now. We have come down and tested that. But we're trading below value on both the shorter time frame microcomposite and the bigger time frame microcomposite. So the key area above us right now is going to be this 80 and a quarter, 1980 and a quarter, with a little bit of resistance here at 78.25. So let's take a look at what that looks like overnight and start moving our numbers over. So right now we just came in and put in another new high here at 77. So our overnight high right now is 77, which is one tick below the VPOC. and we're likely to come up and make a new high here in the Globex. So just pay attention. I might have to make some adjustments in these levels before the open. Our low is all the way down at 68. And you can see that, they came in and the buyers stepped in here at 1970 and a quarter, and that is our overnight VPOC, 70 and a quarter. And we've got an LVN right here that you want to pay attention to at 74 and a quarter. Why? Because it's right just above the value area low from Friday. That's at 73.75. So let me get rid of this because I don't think we need it. We'll just pay attention to whether or not we go in and put a new high. But this isn't going to change my trade levels right now. Right now, I'll be watching this LVN to the downside to hold us inside of value. So 74 and a quarter. Now, you don't want to get short until you're below 73.75, and you don't want to get long until you're above 74.50. So that's a little bit of a slush zone, but we're trading rates inside of the most traded price right now in around that 77 and a quarter. But I would look for a test down here on the RTH open at 74 and a quarter. As I mentioned, the big number above us is this 1980, but right below it you've got this 78.75. Now remember, 1978.75 was your microcomposite value area high from the bigger long-term distribution that's been adjusted down to this level right here. So this number used to be 78.75. So I'm going to be paying attention to that 78.75 LVN that's right here. It's right below the VWAP and the midpoint. So this is going to be my trade zone just above us right here. I'm going to put it right at 79 because if I'm going to get long, I really want to be above that 1980 and a quarter LVN. But you can use a 79 and a quarter to 78.75. Just make sure below shorting 78.75, above, make sure you're above 79 and a quarter. You might, to be real safe, wait till you're above the 80 and a quarter, but I think you got enough room here that if you took the long, they're going to go and test that 80 and a quarter, the CLVN there. So I think you could take the 79 and a quarter to get long into the 80 and a quarter. I think that there's, if we get up here and we don't see a lot of responsive sellers stepping in, that we're likely going to make a quick move up into the 82.75 HVN, and where the VPOC was most of the day on Friday. You can see that this line right here represents where the VPOC was before it shifted down into the close down here at the 77 and a quarter. So, that's going to take us up towards that 81 and a quarter. And remember how important that 81.75 was at the on the September contract. So the first target above the 80 and a quarter and 79.50 area, my target's going to be 81.75. I'm using it because it's still going to be in everybody's memory, and it was an important number for us on the September contract. I'm going to front run the value area high by 3 ticks there. And then, of course, I will be using the value area high as a possible area for responsive sellers to step in and hold us inside of value. Above the 82.75, you got a little bit of resistance at 83.50, but I really don't think we're going to see much until we get up into this 85.50 LVN, and that would be my first target above the 82.75. And then, of course, the big number is the 87, because that is our microcomposite VPOC going back to 0821 until now. And it's also the VPOC of both the bigger and the shorter. It's the VPOC from last week and the VPOC from the microcomposite going back to the 21st. So this is going to be a huge area for us, and it's going to be a target and a trade level. But if we can get above the 87.50, we've got the naked close at 89. I don't think that the 88.50 is going to offer us much resistance. I really think they're going to pop up here. I'm really watching this 92.25 with the naked close at 92.50. So we got a lot of repair to do just above the range from Friday. So if they break out of the range, I'm looking for a move up to my main target above range and above value, which is going to be here at 92.25. And I'm just going to front run it by one tick. And then there's really not much above us until we get to the 94.75. That's the value area high from the microcomposite. So that will be the area that I'll be watching just above us. And then, of course, once we break out of value and we're back into price discovery, the targets above are going to be the naked VPOC at 2,075, the adjusted high for the RTH session at 202, and of course I've got the equalization of 2011, which is our all-time high, and two measured moves at 17.25 and 23.50. I don't think we're going to get there today. Now, if we don't hold the 74.25, then I'd be looking for a move back and first target below, and where I'd be looking for a little bit of support, but I'm not anticipating it to hold too well. But it's going to be my first target below value is going to be the 72, and then the 71.25 is going to be the key area that we want to hold and hold inside a range. If we don't, look for a rotation down to that 70.50, and that is the main target below right now. Sorry, I'm losing my voice. I know this is tight, but I'd be really, you know what, let's do this. Let's not use 72 as just a target. Let's use 72 as a target and our trade level, because I think if we break 72, I don't think the 71.25 is going to be is going to hold. I think they're going to take it at least down to the 70.50. It's got more price acceptance. And we've already been down to 71.25 already, so I think they take it down to 70.50. And then, below that, that 69.25, that's going to be a key level, because that's going to be, that LVN community trade area. And if the responsive buyers don't step in there, then look for them to take out the overnight low at 68. I don't know why this is at 68. And then there really isn't much holding us up at that point in time. So, below that 68, I think the overnight low gets taken out. You've got a little bit of support here at 66.50, but really below that 69.25 area, I'm looking for a move down into these two main levels, which are going to be my main targets below today at 63.25 and 59.25. You've got a naked VPOC to just above that 59.25 at 59.75. So that 72 is the level we've got to hold. If we don't hold the 72, I think that we'll see a rotation down down into the 63.59 area with the first target below at 70.50. But if we can hold above the 74, then I'm looking for a rotational day with a little bit of upside bias to test this this 80, this 81, 82 area. And then if we get a real strong rally up to test the 87 and back into balance. But I think it's going to be a tough ride up. We'll just have to wait and see. But the first clue will be, do they hold inside of value and hold that 74 and a quarter? All right, so let's go take a look at the Russell. So looking at the Russell, the bigger balance that we've been trading inside of the value area low is 55.80. We're trading just below that. We've got the naked close from Friday just below us, and we've got a key level, which is this 50, this 51. You can see that we're inside of the prior distribution value and above the accumulation value, and we're just trying to get back inside of the value that we've been trading in. So this this 50, can I talk? This 55.60 area, call it 55.80, is going to be important. If we can get above 55.80, then I think we've got a nice trade up into balance and around that 11.60.40. But if we can't get above that and we break below this 51, look for a move down to 48, but more likely coming down into this 45, 44, 45 area to test the value area low and the value area high from these two distribution zones. And then inside and below that, you've got 42.60. Key level to hold right now is this 11.40. 60. Anything below that, I think we get a bigger move and a rotation down into the 11.34.20 with a little bit of support at 31.80, but really the key level is going to be this 21.70. Anything below 21.70, look for them to rotate back down into the 11.60, 11.13.90. That was your 11.18. And 11.16.40 areas on the September contract, but more importantly, it is the composite VPOC down here at 11.11.60 going back to October the 10th, 2013. So let's take a look at what that looks like on the shorter time frame and what we've done overnight. So we're going in and making new highs overnight. I can adjust this high out. So 54.70 right now is the overnight high. We're trading just below it and just above the VPOC. So we're going to be trading inside of the lower distribution and inside around balance from Friday. The key, as I was mentioning, is going to be this 56.80 level. It's the LVN. We can get rid of this now. Nothing else changes, right? I don't think we'll get a VPOC shift either. We'll just have to watch that just in case. So this 55.80 level and this 56.80 level, I'm going to use the 56.80 just to be safe because it's the LVN, it's the most recent price. As my trade area, likely get some two-sided action here in this lower distribution. The level below that I'm going to watch is going to be the 11.50. You've got the 51.10 CLVN, but remember that that value area low from the September contract was 11.50.30, and our value area low is 11.50.10, and then you get the range low at 11.50. So I'm going to be using this 11.50 area, and I really don't think that there's any edge in between these two areas that's real strong. I think you're going to see a lot of choppy action in this area. And I would personally wait for them to come down and test the value area low and range low and either break outside a range and below value for a move down to take out the overnight low and that 48.80 microcomposite VPOC with a move down to that 46.20 is the area that I'd be looking for responsive buyers to possibly step in. Below 46, you've got the target, the CHVN at 42.60. And then the other side of balance and a key level is at 1140.60. Come on. And then below 1140.60, it's all about this naked close, the gap close at 36, and the microcomposite VPOC at 34.20. And you can see we've got a naked VPOC too down here at 32.75 with the lower side of balance being that 31.80. That fits coming down into. I'd still take the 34 as a target and look for continuation down to 32.70 with possible support coming in at the CLVN at 31. There's really nothing below that until you get down to the 26.60 area. And then anything below that, I'd be looking for a bigger move down. This is a pretty blunt area of the profile with some undetermined fair value. I think between 31.80 and 21.70, we're going to get a lot of chop. But I'll be watching the 21.70 as a key level to hold, because anything below 21.70, I think takes you down into towards that 1113.90. Might as well put it on there, 1113.90, and more importantly, the 1111.60. Come on, there you go. Don't think we're going to get much down there today, but we always look at our big numbers above the 56.70. I'd be targeting the 58.30 midpoint as your first target above, with responsive sellers coming in around the 59.30 area. But if we get about outside of value, everything's going to be about this 1160.40, which is the current microcomposite VPOC. Where's my target's not going? Sometimes my buttons do not want to work for me. 60.40. There we go. And then, you've got above that, you've got 63.30. And then the big number, which is going to be up here at 66. 66.20 is where I'd target because it's a CHVN. But this is going to be a pretty choppy area up here because there's a lot of repair that's got to be done up here. But above, in fact, I'm not going to use this as a target. I'm going to use this as a target and trade area, because if we break above the 66.20, then I'm looking for a lot of repair up here in the 67.10, 67.60, and there's really not much until we, above that, until we get to the 69.60, and then above that, the other area would be the big, resistance is going to be the 72 area. And above 72, I'm expecting a much bigger move up into this 88, 92, and 98.50. Let's take a quick look at gold. I know we're running out of time. I'll make this real short. Gold has found a little bit of support where we expected it to, down here at this 1229.20 area. I've got to fix my chart here on some of these levels. But right now, resistance is going to be above us at 1240.60. I'm expecting chop in this area right now. I'm just going to draw a little bit of a profile here for the last 2 days. See where value is. Value is right where we're trading right now at 1235.36 level. So if they hold this, I'd be looking for a move, continuation back up to the 1240.60. Still running short on my short. We've got the year open. I believe the year open is 1204 area, 1204, 1205. So, you know, fact that we've had this big of a sell-off in gold, they haven't been able to support, and a possibility of a run back up on the indices. Now, I'd be looking at and targeting this 1206, 1204 area. I have to check my notes to see exactly where the year opened, but it's in around this 1200 area. So we could see some continuation down into this 1206. The key level that you're going to want to watch right now is this this 1218.25. Below 1218.25, I think we get the bigger move down to 1206. But in between the 1240 and the 1218.25, I think that we get a lot of chop around here. But if we do move above 1240, look for continuation up into the 1246, 1245 to 1248 area. Up here, this distribution. All right, that's going to complete us for the pre-market session for Monday, September the 15th, 2004. As always, trade well, trade safe, and we'll catch you on the flip side.